and then I don't. There's a part of it wants to like do a quick scalp here, but gosh, gonna go so fast that I don't know if I'll be able to trigger this fast enough. You feel me? Because it can shoot up just to test the 15-minute. This 15-minute fair value gap / 2 hour fair value gap open. Since we have like that cradle type of thing, look at it. About to do it now. How much money is that? $12, $11 scalp. How quick can you be? But see, my thing, what if it doesn't go the whole way and it goes back down? I love the fake outs on today because they are so dramatic. I'm gonna practice a little bit of patience here and let this come into fruition here. Just be a little patient. A little patient goes a long way. I'm just gonna keep telling myself that today. All right, let's see. Federal funds rate as expected. I'm not worried about that. Just want that press conference. All hell gonna break loose as soon as his face shows up on the screen. That's what I feel like. All right, I'm on the YouTube channel for the Federal Reserve. Let me not share that music with y'all just yet. And I can share my sound later when he pop on. But see this little fake, like, ooh, I love, man, look. Didn't I tell y'all not to read this chop this morning either? Look at this. It's just sideways all day. That's why we just did a little chart analysis. Just stay put. How you feeling over there, Esther, with your SPY puts? Feeling all right?
Yeah, my SPY puts there. I'm more concerned about Disney and silver at this moment because that's real money. And it just this breaking news just crossed CNBC. Here's what changed in the new Fed statement.
What changed? I see it too.
Yeah, recent indicators suggest that economic activity has continued to expand at a solid pace. That part's new, continued to expand. In recent months, there has been a lack of further progress towards the committees to present here. Let's see. Committee seeks to achieve. That's the same. The committee judges that the risks to achieving its employment and inflation goals have moved forward better balance over the past year. The economic outlook is uncertain, and the committee remains highly attentive to inflation risks. Everything stays the same. Then until we get to beginning in June, the committee will slow the pace of decline of its securities holdings by reducing the monthly redemption cap on Treasury securities from 60 billion to 25 billion. The committee will maintain the monthly redemption cap on agency debt and agency mortgage-backed securities at 35 billion and will reinvest any principal payments in excess of this cap into Treasury securities. The committee is strongly committed to returning inflation to its 2% objective. The rest of the statement stayed the same. That whole part about beginning in June, that is all new. So that is what they're doing. They're slowing, getting all this debt off of their books, and that might be what the market wants to stay up or to go up. But you're right. It's going to be the conversation at 2:30. That's going to tell us more. The questions are everything.
The questions are everything, man. Like, I mean, y'all can get a bowl of popcorn started because some of this shit be hilarious, comical. You'd be like, what did you really just say that just come out your mouth? So let me see. I'm opening up the statement for myself to see, which is right there on the Fed website, of course. I'm so tired of hearing about 2%. You know, I'm just like desensitized.
Me too. It's just, we're never gonna get there.
That's how I feel. It's just like it's just something to say. It's a hopeful dream. So it's looking at, what do we got here? If they're trying to get all the debt off, I mean, potentially come up, but how are you trying to come back up? Now, I know for a fact, here's my other thing. All right, let's come into my 2 hour. We didn't finish this fair value gap up here. So it's like, at some point, I would assume you will come back. It doesn't align with too much daily outside of the daily, like candle top. So that's another thing. My eyes are on it for the turnaround down here. Remember, I even mentioned it yesterday, like come down, but not as far down, that bat pattern because of this. It's all because of this fair value gap up here. And that would just be running back, retesting this area, and then coming back down. Now, how soon? You know, I think it's going to take some time. And I want to see if today, when he starts talking, so we don't have a run. You know how some days where this day lines up where like there's just like a long Marabutsu candle of some sort that we could just take off to, or there's a gap. Sometimes it lines up with that. Not so much right now. So we're going to practice patience for sure, man, on getting this down if we want to take it down some more. I'm not convinced today. I think tomorrow I will have a better conviction on it coming up or down, whichever one I want to do, whichever one it wants to do. I believe it wants to come up into this fair value gap just a bit. But of course it can wait. So we're just looking, that means tomorrow's candle, that means like when we start at 6 p.m., the next candle could come up into this fair value gap, but it just depends. 2:30, any other analysis? What y'all think we may do after? Everything for the most part is still 2%. So, Dension cap treasury. I'm just trying to, like, I'm reading over the information Esther just read, and I'm trying to feel it out. Yeah, that should, I'm thinking if you put money in, but it's for debt, so we could, I'm wondering if we just, remember I said making this W, so if we're making a W, then that means from the daily perspective, let me switch to, let's clean our chart for candlesticks. That means we would be trading between like here, 51.64, 68, excuse me, and like the low here, 49.66, and that's like the lowest, and we could probably take this up a little higher. Like I feel like this is like the large trading range. If you were come up, then back down, make W, then come back up, and then do a little cup and handle dance, and then and then decide to break off. And that's like a couple days, weeks, y'all, for it to do that type of formation to form. So for the month of May, I'm wondering if how we're setting up for, remember I told you the article, I don't know where, I saw the headline, because Benzinga has so many headlines, it drives me nuts. And if you don't like silence your notifications, you can get almost, I feel like, a headline every couple of hours. And one of them was saying about a rally in the summer, which doesn't like, I don't know. I'll have to do more back testing, put that on my other notes of research today. Back testing on summer rallies, right? Because some summers can slow down. And then it's the individual stocks that can really ramp up. Meaning like the S&P can kind of take a pause over the summer. I'm curious to see how that plays out, seriously, just because I know how they like to blow air into the headlines to get you all fearful for no good reason at all. No good reason at all. All right. 15 minutes until it's time. And when it's time, I'll do like a side-by-side view, and we'll watch Ian have a panic attack. You see how it's just doing a little, oh, I'm just going to come up just a little bit. Oh, I'm just going to sit right here. Yeah, no, I don't trust you. Not even a little bit. Especially with no fair value gaps, man. Oh, they be setting up the chart like this on purpose. On purpose. We break down. My thing is, what do we break down long enough to shoot back up and then you have one of them ugly tweezer bottom things like one of these things? That's what I'm thinking. I would love to ride it back up, to be honest with you guys, to close out some of this fair value gap. I'm leaning. All right, where is Randy leaning? Randy on the day trade for this afternoon. If I had to go pick a direction, I would pick up versus down. I know that sounds so crazy, but I feel like I have more conviction with this fair value gap being up here than I do anything on the bottom right now. Because when I zoom out to the daily, yes, we have a gap and all that, but we wick through it, so it doesn't have to come down this far. So I would bet on like a retracement back up in the air before I bet on it breaking a bottom. Anything down below, I feel is short, very short-lived. You don't have a lot of fair value gap. You have a lot of tweezers bottoms. Not saying it still won't break down that way. It's just not a lot of data that way, and outside of it coming back for this gap and putting the body more through the gap. It's the only thing I could really see it doing, and putting the body through the gap would mean to take profit at 49.83, maybe round that up a little bit. Round that up a little bit. 49.84 or 85. And then what if it does the W where the double bottom forms in between this range and then it still comes up? So the bottom is, man, I'm patient with the bottom, man. Very, very patient with the bottom. And then, but you know, that quick scalp to the top, like because of the liquidity, I like that. I like it if it can do it. See what it wants to do. Guy gonna start talking, and I'm excited to see what it says. I think I'm more excited for the type of questions that I'm about to hear. Yeah, I think I'm more excited for the type of questions and how they just kind of beat them up into more of my entertainment. All right. I'll put another reminder out there. Other tickers, how they fare out. Let's scan through while we wait. Everybody, take that deep breath, right? Take a deep breath and shoot, slingshot. Look at Eli Lilly. It's stuck in the sky. Lily is like, well, at least it stayed up there, I guess. Thought about a short down. It's like, nah, FOMC day. It looks like it's taking a breath. All right, so Fatima thought it was Zoom. I saw her little notification. Just jump in here. I am considering the next ones like something I can do to make this like a really bigger thing and like have it streaming. Especially the pre-talk, I can like stream that more to YouTube and things, and I can make it a Zoom thing. Stand by for that. You guys will get emails. I have a lot of little creative ideas to kind of retarget the Trader's Crib in a different vibe than that coming out of COVID vibe of having an online community. It has to be different. So I'm stewing over here. Just stand by. We're slowly moving places. Yeah.
I have a question.
Yes, ma'am.
So if we were to look at going up on SPY when the madness begins, what I see with the chart on SPY is that if we can cross into the daily fair value gap at 502, we might be able to run it all the way up to 507 if it wants to take the whole daily fair value gap. Or is that wishful thinking on my part?
Make sure you're asking something. Let me see my screen. So one more time, sorry, because I was having a little technical glitch over here.
I was looking at SPY.
So SPY, yeah. So SPY, what do you want to do? You're in puts. You have profitable puts right now?
Yeah. No, it's not. It's in sim too. I don't care. Like, you know what I mean? I like. But if we're gonna do a hedge, especially with real money, in theory,
okay.
I'm thinking if we cross into that daily fair value gap. Well, I was looking at daily, but you can look at the 2 hour. See, look at that, beautiful fair value gap. A lot of the bacon candles.
So what this candle is creating that fair value gap. So if we run back up, it's going to shrink it.
Right. So I'm just thinking, do we think it's going to take a run up all the like as far? How far into that gap do we think it's going to actually?
So I go
of the
1 wick,
yeah,
1 wick, right, and then obviously the close, but that's wishful thinking.
Yeah, that's wishful thinking. 505 though.
Right, 505. And then come down in the 2 hour to dissect that area of 505. And maybe because of the doji here, maybe we come to the top of the candle body, 504 maybe. The 2 hour, from the 2 hour perspective, still 504. So 504 even, right? It will definitely get you where you need to be if it man, look,
that if cross 502 though, I want to see it actually tell us it's really going up. What do we, you know what I mean? So we jump in.
Yes, I do know exactly what you mean. That's why my ass hasn't been in all day. Right. It's like we are going to wait.
Yeah, I think even if it's just a $2 move, 502 to 504. How much time would you buy if you were to do that?
Yeah. $2. I've been so good with $2.
Yeah.
And it definitely looks like they want to give you the vibes, but man, please don't get faked out today, y'all.
Seriously. I mean, I might just not take this at all, right? But for argument's sake.
That's kind of how I'm feeling. Like I want it so bad, or at least So for me, my perspective, because of the fair value gap that's not 100% from the SPY perspective, it looks completely finished. Because that fair value gap comes up here like that, but then you have the rest of the candle body and trying to line it up with ES. Okay, let's come out to the 2 hour to try to do so. So. All right, so if we line it up like that, SPY finished the fair value gap, came down, and that's why it did what it did. Plus, we knew from the ES perspective, it stopped at the daily fair value gap close. It was daily fair value gap close in the same area, right? Okay, great. So now that we fall, do we come back up to now test this long candle running up here and into this gap, right? Is that where we go next? Because of the fact that we have fair value gap left in ES, that's not done, well, you know, is that possible? With a little bitty fair value gap here, which may be similar to this, you know, I don't know. Well, y'all let me know what you think. That will help you hold SPY if you believe it's gonna go that high, because then you can, you know, potentially, but that's just coming all the way up. That's all the way. That's if it's like Powell said it, we're fine. He answered the questions in a way where it's like we're just gonna run back up and retrace this sucker for today, and that's it. He's about to come on. So that gives me a little, that's how I'm looking at ES, because I think I can catch the rest of this liquidity up here. And damn it, y'all know I'm gonna try. So see how that goes for moi. Okay. Moi. Y'all know I'm a clown. Y'all know I'm a clown. We got 4 minutes till Powell makes an appearance, and this is what we're doing. Like I said, I definitely think we could take this fair value gap right click. So I'm gonna go for that. I think we can get it. I think I'm being risky as hell by trying. I know that. Because it's only a couple more dollars to it. It was $12 at the entry. 10, 11, you're looking at a $5 scalp. Days like this, I take my money, get out of Dodge, and grateful for what I have, if I'm gonna do it. But if you take it through it, like I believe it can actually come in and through with this volatility, so that'd be $20 because it's FOMC day. So there's that. Can it do it for us, or is it going to be too quick? Too quick with the quickness. Now, recognize the quickness can also help you get a new entry. Like if you missed the first entry that we're about to take right now, if it pulls back on us, you can get back in. Don't forget that. Please don't let FOMO consume you so much that you don't recognize that you can get in on a pullback. Anybody else feel like we could take this fair value gap, or I'm just the only crazy one? I can be crazy by myself. It's fine. That's how I got here. I got here.
The SPY options are so expensive. Oh my God. I mean, if you're looking for time, they're really expensive. 505 on at June 21st is a.
But this is not a time day. This is a you come down. Like I believe if you got a cash account answer. So me personally, I'll do under 14 days, get it and out, and be done with it.
Yeah. All right.
You see what I'm saying? And be done with it. Take what you can get with whatever delta it is, and you know the math how to do it. So be okay with that. Figure out how to be okay with that move today. By coming down on time, coming closer in the money, and taking it that way to maximize delta, minimize risk of theta by having a few days, but managing your capital by not taking more time than you need for a $2 move on a ticker that moves $3 a day. Let's be real. And it's FOMC day.
No, I'm doing it in sim because I'm just curious to see if we can catch it, right? Like so.
Yeah, no, but still that same mindset still has to take place so it can transfer over into live, because that's the goal, right? We ain't staying in sim forever. So come down, see if it grabs it, see if you can do that same thing in the sim with it and go from there. Just kind of. Okay. All right, we have 1 minute. I'm gonna get out at 50.90. I'm gonna take the psychological number on this one at FOMC. You ain't gonna get me. I'm gonna get you. I'm gonna get you, sucker. I'm telling you, it's a great old flick. I feel that way with this market. Okay, that's how I feel. I'm gonna get you, sucker, all day, every day. See how it's see this stuff on the 15-minute. Ooh. All right, I'm gonna go 2-hour SPY against 15-minute ES. So you can see how it's drawing here. So as it comes up and as I manage.
What's our target on SPY? If we're managing our trades, what's our target on SPY? Is really 504, or you could think it can bounce higher than that?
I do think it could bounce higher than that, but I think you should take profit first and then get back in. If possible, just because it's slippery. He hasn't started speaking yet, and he's about to. So it's like, I think look at this. See this? Yeah, pop up and then pop down. Like, so let's just see what we could do here. Let me see if he's on. Not yet.
So what do you think? As soon as he starts talking, it's gonna go up or down, or?
I think so. I think it can pick a better direction once he starts. I do think that. Let me refresh and see if he's coming on. Hold on.
But overall for SPY, this week is bearish, right? It's not bullish.
I feel like it, but it could pull. Yeah, I'm not trying to do a pull up. I'm trying to do a quick scout with ES. That's if it holds. Like if for whatever reason something changes and like you feel the data's gonna bring us up. He's talking now. Let me get you guys set up and y'all here. But I do think it's bearish overall, but with slight pull ups. We'll just see how we can play it because things can run up for 2 days. That still has a what I'm trying to say, bear trend. All right.
Highly attentive to inflation risks. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.6% in the first quarter, private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, was 3.1% in the first quarter, as strong as the second half of 2023. Consumer spending has been robust over the past several quarters, even as high interest rates have weighed on housing and equipment investment. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. The labor market remains relatively tight, but supply and demand conditions have come into better balance. Payroll job gains averaged 276,000 jobs per month in the first quarter, while the unemployment rate remains low at 3.8%. Strong job creation over the past year has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has eased over the past year and the jobs-to-workers gap has narrowed, but labor demand still exceeds the supply of available workers. Inflation has eased notably over the past year, but remains above our longer-run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The inflation data received so far this year have been higher than expected. Although some measures of short-term inflation expectations have increased in recent months, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are strongly committed to returning inflation to our 2% objective. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings, though at a slower pace. Over the past year, as labor market tightness has eased and inflation has declined, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect that it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. In particular, and as I noted earlier, readings on inflation have come in above expectations. It is likely that gaining such greater confidence will take longer than previously expected. We are prepared to maintain the current target range for the federal funds rate for as long as appropriate. We're also prepared to respond to an unexpected weakening in the labor market. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We will continue to make decisions meeting by meeting. Turning to our balance sheet, the committee decided at today's meeting to slow the pace of decline in our securities holdings, consistent with the plans we released previously. Specifically, the cap on Treasury redemptions will be lowered from the current $60 billion per month to $25 billion per month as of June 1. Consistent with the committee's intention to hold primarily Treasury securities in the longer run, we're leaving the cap on agency securities unchanged per month, and we will reinvest any proceeds in excess of this cap in Treasury securities. With principal payments on agency securities currently running at about $15 billion per month, total portfolio runoff will amount to roughly $40 billion per month. The decision to slow the pace of runoff does not mean that our balance sheet will ultimately shrink by less than it would otherwise, but rather allows us to approach its ultimate level more gradually. In particular, slowing the pace of runoff will help ensure a smooth transition, reducing the possibility that money markets experience stress and thereby facilitating the ongoing decline in our securities holdings that are consistent with reaching the appropriate level of ample reserves. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you. Howard Schneider with Reuters. A question to follow up, if I could. Do you consider the current policy rate still, are you confident that it's sufficiently restrictive to get inflation back to 2%?
So I do think the evidence shows, pretty clearly that policy is restrictive and is weighing on demand. And there are a few places I would point to for that. You can start with the labor market. So demand is still strong, the demand side of the labor market in particular. But it's cooled from its extremely high level of a couple of years ago. And you see that in job openings. You saw more evidence of that today in the JOLTS report, as you'll know. It's still higher than pre-pandemic, but it has been coming down both in the Indeed report and in the JOLTS report. That's demand cooling. The same is true of quits and hiring rates, which have essentially normalized. I also look at we look at surveys of workers and, pardon me, surveys of workers and businesses and ask workers, are jobs plentiful, and ask businesses, are workers plentiful? Is it easy to find workers? And you've seen that the answers to those have come back down to pre-pandemic levels. You also see in interest-sensitive spending like housing and investment, you also see that higher interest rates are weighing on those activities. So I do think it's clear that that policy is restrictive.
Sufficiently restrictive, I guess.
So I would say that we believe it is restrictive, and we believe over time it will be sufficiently restrictive. That will be a question that, that the data will have to answer.
So as a follow-up, if inflation
Pardon me.
continues running roughly sideways as it has been, the job market stays reasonably strong, unemployment low, and expectations are anchored and maintained, would you disrupt that for...
Expectations are not anchored?
Or anchored.
Or anchored.
Stable, roughly. Would you disrupt that for the last half point on PCE?
You know, I don't want to get into complicated hypotheticals, but I would say that, you know, we're committed to retaining our current restrictive stance of policy for as long as is appropriate, and we'll do that.
Gina. Thanks for taking our questions, Chair Powell. I wonder, you know, obviously Michelle Bowman has been saying that there is a risk that rates may need to increase further, although it's not her baseline outlook. I wonder if you see that as a risk as well, and if so, what change in conditions would merit considering raising rates at this point?
So I think it's unlikely that the next policy rate move will be a hike. I'd say it's unlikely. You know, our policy focus is really what I just mentioned, which is how long to keep policy restrictive. You ask, what would it take? You know, I think we'd need to see persuasive evidence that our policy stance is not sufficiently restrictive to bring inflation sustainably down to 2% over time. That's not what we think we're seeing, as I mentioned. But that's something like that is what it would take. We'd look at the totality of the data answer to that question. That would include inflation expectations, and all the other data too.
Would that be like the acceleration in inflation?
Well, I think, again, the test, what I'm saying is if we were to come to that conclusion that policy weren't tight enough to achieve that, so it would be the totality of all the things we'd be looking at. It could be expectations, it could be a combination of things, but if we reach that conclusion and we don't see evidence supporting that conclusion, that's what it would take, I think, for us to take that step.
Chris.
Thank you, Chris Rugaber at Associated Press. You didn't mention the idea that rates are at a peak for the cycle, and didn't mention the idea that it might be appropriate to cut rates later this year, as you have at previous press conferences. So has the Fed sort of dropped its easing bias? Where are you standing on that?
So on, let me address cuts. So obviously, our decisions that we make on our policy rate are going to depend on the incoming data, how the outlook is evolving, and the balance of risks, as always. And we'll look at the totality of the data. So I think, and we think, that policy is well positioned to address different paths that the economy might take. And we've said that we don't think it would be appropriate to dial back our restrictive policy stance until we've gained greater confidence that inflation is moving down sustainably toward 2%. So, for example, let me take a path. If we did have a path where inflation proves more persistent than expected and where the labor market remains strong, but inflation is moving sideways and we're not gaining greater confidence, well, that would be a case in which it could be appropriate to hold off on rate cuts. I think there's also other paths that the economy could take which would cause us to want to consider rate cuts, and those would be, two of those paths would be that we do gain greater confidence, as we've said, that inflation is moving sustainably down to 2%, and another path could be, you know, an unexpected weakening in the labor market, for example. So those are paths in which you could see us cutting rates. So I think it really will depend on the data. In terms of peak rate, you know, I think really it's the same question. I think the data will have to answer that question for us.
Well, and could you just follow on the path where you might not cut? Is that, you mentioned that it would be inflation persistent. I mean, is inflation, would that be the key data in making that decision, or could you expand a bit more on that? Thank you.
Again, it's we've set ourselves a test that for us to begin to reduce policy restriction, we'd want to be confident that inflation is moving sustainably down to 2%. And for sure, one of the things we'd be looking at is the performance of inflation. We'd also be looking at inflation expectations. We'd be looking at the whole story, but clearly incoming inflation data would be at the very heart of that decision.
Nick Timrose of the Wall Street Journal. Chair Powell, to what extent has the easing in financial conditions since November contributed to the reacceleration in growth? And do you now expect a period of sustained, tighter financial conditions will be needed to resume the sort of disinflation the economy saw last year?
So I think it's hard to know that. I think we'll be able to look back, from down the road and look back and understand it better. If you look at, let's look at growth. Really, what we've seen so far this year in the first quarter is growth coming in about consistent with where it was last year. I know GDP came in lower, but you don't see an acceleration in growth. I mean, the thought would be that financial conditions loosened in December, and that caused an uptick in activity, and that caused inflation. Presumably, or tightening in the labor market. You don't really see that happening. What you see is economic activity at a level that's roughly the same as last year. So, what's causing this inflation, we'll have a better sense of that over time. I don't know that there's an obvious connection there, though, with the easing of financial conditions. In terms of tightening, you're right. I mean, rates are certainly higher now and have been for some time than they were before the December meeting, and they're higher, and that's tighter financial conditions, and that's appropriate given what inflation has done in the first quarter.
You've said in the past that stronger growth wouldn't necessarily preclude rate cuts. I wonder, would continued strength in the labor market change your view about the appropriate stance of policy if it was accompanied by signs that wage growth was reaccelerating?
So I just want to be careful that we don't target wage growth or the labor market. And remember what we saw last year. Very strong growth, a really tight labor market, and a historically fast decline in inflation. So and that's because we know there are two forces at work here. There's the unwinding of the pandemic-related supply-side distortions and demand-side distortions, and there's also monetary policy, restrictive monetary policy. So I wouldn't rule out that something like that can't continue. I wouldn't give up at this point on further things happening on the supply side, either because we do see that companies still report that there are supply side issues that they're facing, and also even when the supply side issues are solved, it should take some time for that to affect economic activity and ultimately inflation. So there are still those things. So I don't like to say that either growth or a strong labor market in and of itself would automatically create problems on inflation, because of course it didn't do that last year. You ask about wages. We also don't target wages. We target price inflation. It is one of the inputs. The point with wages is, of course, we like everyone else like to see high wages, but we also want to see them not eaten up by high inflation. And that's really what we're trying to do, is to cool the economy and work with what's happening on the supply side to bring the economy back to 2% inflation. And part of that will probably be having wage increases move down incrementally toward levels that are more sustainable.
Rachel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. You talked about needing time to gain more confidence that inflation is sustainably moving back down to 2%. It's May now. Do you have time this year to cut 3 times, just given the calendar?
Yeah, I'm not really thinking of it that way. What we've said is that we need to be more confident, and we've said, my colleagues and I today said, that we didn't see progress in the first quarter, and I've said that it appears then that it's going to take longer for us to reach that point of conference. So I don't know how long it'll take. I can just say that when we get that confidence, then rate cuts will be in scope, and I don't know exactly when that will be.
And with hindsight, are there any signs that you can look back on now, looking at the reports from January or February or March, that suggested something more worrying than just expected bumpiness?
Not really. So I thought it was appropriate to reserve judgment until we had the full quarter's data, until we saw the March data. And so take a step back. What do we now see in the first quarter? We see strong economic activity. We see a strong labor market, and we see inflation. We see 3 inflation readings. So I think you're at a point there where you should take some signal. We don't like to react to 1 or 2 months' data, but this is a full quarter, and I think it's appropriate to take signal now, and we are taking signal. And the signal that we're taking is that it's likely to take longer for us to gain confidence that we are on a sustainable path than a 2% inflation. That's the signal that we're taking.
Mr. Chair, if I could, Steve Leisman, CNBC, if I could follow up on that. What particular areas were sort of temporary or blips in the inflation data in the first quarter, and what's the dynamic by which you expect them to work out in the coming months and quarters?
Yeah. So we will, we will put the thing, we have put the thing under a microscope. I will say nothing is going to come out of that that's going to change the view, I think, that, in fact, we didn't gain confidence and that it's going to take longer to get that confidence. I just think, you know the story. What's happened since December is you've seen higher goods inflation than expected, and you've seen higher non-housing services inflation than expected, and those two are working together to sort of be higher than we had thought. And there are stories behind how that happened. I think my expectation is that we will, over the course of this year, see inflation move back down. That's my forecast. I think my confidence in that is lower than it was because of the data that we've seen. So we're looking at those things. We also continue to expect, and I continue to expect, that housing services inflation, given where market rents are, those will show up in measured housing services inflation over time. We believe that it will. It looks like that there are substantial lags between when lower market rates turned up and for new tenants, and when it shows up for existing tenants or for in housing services. So,
if I could just follow up, is there a bit of a contradiction in the idea that you are reducing quantitative tightening, which is sort of an easing, while you're holding rates steady at a restrictive rate to try to slow and cool the economy and inflation? Thank you.
No, I wouldn't say that, no. I mean, the active tool of monetary policy is, of course, interest rates. And this is a plan we've long had in place to slow, really not in order to, to provide accommodation to the economy, but to be less restrictive to the economy. It really is to ensure that the process of shrinking the balance sheet down to where we want to get it is a smooth one and doesn't wind up with financial market turmoil the way it did the last time we did this, and the only other time we've ever done this.
Craig.
Craig Torres from Bloomberg. 2 questions. First, simple one. Given the run of data since March, has the probability in your mind of no cuts this year increased or stayed the same? That's the first question. Second question. Chair Powell, you joined the board in 2012, and I'm sure you remember, as I do, what the jobless recovery was like. Lawyers, accountants, all kinds of highly qualified people who couldn't get jobs. And given your history there, I wonder if there's an argument for being more patient with inflation here. We have strong productivity growth. That's helping wages go up. We have good employment. And so it seems to me there's a lot of hysteria about inflation. I agree. It's, nobody likes it. But is there an argument for being patient and working with the economic cycle to get it down over time? Thank you.
So on your first question, I don't have a probability estimate for you, but all I can say is that, we've said that we didn't think it would be appropriate to cut until we were more confident that inflation was moving sustainably on at 2%. We didn't get our confidence in that didn't increase in the first quarter, and in fact, What really happened was we came to the view that it will take longer to get that confidence. And I think I think it's the economy has been very hard for forecasters broadly to predict its path, but there are paths to not cutting, and there are paths to cutting. It's really going to depend on the data. In terms of the employment mandate, to your point, if you go back a couple of years, our sort of framework document says that when you look at the two mandate goals, and if one of them is further away from goal than the other, then you focus on that one. It's the time to get back there times the times how far it is from the goal, and that was clearly inflation. So our focus was very much on inflation, and this is what we referred to in the statement. As inflation has come down now to below 3% on a 12-month basis, it's become we're now focusing the other goal, the employment goal, now comes back in to focus, and so we are focusing on it. And that's how we think about that.
Claire.
Claire Jones, Financial Times. Thanks a lot for the opportunity to ask the questions. Just to go back to the answer before the previous one, it seemed to suggest that you think the likeliest path of inflation is one that's going to allow you to have a situation where rates are lower at the end of the year than they are right now. It would be good if you could just confirm whether or not that's a correct reading. And the Q1 GDP print has led to some to start mentioning the term stagflation with respect to the US economy. Do you or anyone else on the FOMC think this is now a risk? Thank you.
Yeah, I'm not dealing really in likelihoods. I think there are paths that the economy can take that would involve cuts, and there are paths that wouldn't. And I don't have great confidence in which of those paths. I think I would say my personal forecast is that we will begin to see further progress on inflation this year. I don't know that it will be sufficient. I don't know that it won't. I think we're going to have to let the data lead us on that. In terms of your question, your second question was stagflation. I guess I would say I was around for stagflation. And it was, 10% unemployment. It was high single digits inflation. Right now we have and very slow growth. So right now we have 3% growth, which is pretty solid growth, I would say, by any measure. And we have inflation running under 3%. So I don't really understand where that's coming from. And in addition, I would say, most forecasters, including our forecasting, was that last year's level of growth was very high, 3.4% in, I guess, the fourth quarter, and probably not going to be sustained and would come down. But that would be our forecast. That wouldn't be stagflation. That would still be to a very healthy level of growth. And of course, with inflation, we will return inflation to 2%. And that won't be, so I don't see the stag or the inflation, actually.
Michael McKee from Bloomberg Radio and Television. The vice chair of the FOMC said recently that he's willing to consider the idea that potential growth has moved up, and of course he's Mr. Potential Growth, our star. Do you share that view, and would that imply that maybe policy isn't tight enough?
So I think I would take that question this way. We saw a year of very high productivity growth in 2023. And we saw a year of, I think, negative productivity growth in 2022. So I think it's hard to draw from the data. The question is, will productivity run? There are two questions. One is, will productivity run, persistently above its longer run trend? I don't think we know that. In terms of potential output, though, if that's a separate question. We've had what amounts to a significant increase in the potential output of the economy that's not about productivity. It was about having more labor, frankly, both through, in 2023, both through participation and also through immigration. So we're very much like other forecasters and economists getting our arms around what that means for potential output this year and next year, and last year for that matter too. So I think in that case, I think you really do have a significant increase in potential output, but you've also got, so you've got more supply, but those people also come in, they work, they have jobs, they spend, so you've also got demand. So it may be that you get more supply than you get demand at the beginning, but ultimately it should be neither inflationary nor disinflationary over a longer period.
Well, you said earlier that at this point you're not really considering rate increases. If growth is higher but you're not considering rate increases, does that imply that you're more worried about causing the economy to slow too much than you are about inflation taking off again?
No, I think we believe our policy stance is in a good place and is appropriate to the current situation. We believe it's restrictive, and our evidence for that I went over earlier. You see it in the labor market, you see it in inflation-sensitive spending, where demand has clearly come down a lot over the past few years, and that's more from monetary policy, whereas the supply side things that are happening are more on the supply side. So that's how I would think about it.
Edward. Thank you, Mr. Chairman. Edward Lawrence from Fox Business. So GDP growth is about 2%. Inflation, employment is about 4%. It feels a lot like a steady state, and we have 3% inflation. So if the data remains the same that you're seeing, and I know you said you don't see a rate hike, but it stands to reason that you would need a rate hike to get from 3 to 2% inflation. So was there any discussion about a rate hike in today's meeting? And are you satisfied with 3% inflation for the rest of the year?
Well, of course, we're not satisfied with 3% inflation. 3% can't be in a sentence with satisfied. So we will return inflation to 2% over time, but over time. And we think our policy stance is appropriate to do that. So if we were to conclude that policy is not sufficiently restrictive to bring inflation sustainably down to 2%, then that would be what it would take for us to want to increase rates. We don't see that. We don't see evidence for that. So that's where we are.
Was there a discussion about a rate hike at all?
So the policy focus has really been on what to do about holding the current level of restriction. That's part of the policy. That's where the policy discussion was in the meeting.
I wanted to follow on the 3%. Is there a time frame of persistent inflation that would trigger a rate hike?
There isn't any rule. You can't look to a rule. These are going to be judgment calls. Clearly, restrictive monetary policy needs more time to do its job. That is pretty clear based on what we're seeing. How long that will take and how patient we should be, it's going to depend on the totality of the data, how the outlook evolves.
Victoria.
Hi, Victoria Guido with Politico. You've talked about your commitment to being apolitical and nonpartisan, and I was just wondering, given that it's an election year, is the bar for rate changes higher close to an election? And similarly, is there a significant economic difference between, starting to cut in, say, September versus December?
So we're always going to do what we think the right thing for the economy is when we come to that consensus view that it's the right thing to do for the economy. That's our record. That's what we do. We're not looking at anything else. It's hard enough to get the economics right here. These are difficult things, and if we were to take on a whole other set of factors and use that as a new filter, it would reduce the likelihood we'd actually get the economics right. So that's how we think about it around here, and we're at peace over it. We know that we'll do what we think is the right thing when we think it's the right thing, and we'll all do that, and that's how everybody around here thinks. So I can't say it enough that we just don't go down that road. If you go down that road, where do you stop? And we're not on that road. We're on the road where we're serving all the American people and making our decisions based on the data and how those data affect the outlook and the balance of risks.
And then is there a significant difference between, whether you start in, say, September versus December?
There's a significant difference between an institution that takes into account all sorts of political events and one that doesn't. That's where the significant difference is, and we just don't do that. I mean, you can go back and read the transcripts for every. This is my fourth presidential election here. Read all the transcripts and see if anybody mentions in any way the pending election. It just isn't part of our thinking. It's not what we're hired to do. If we start down that road, I don't know how you stop. So.
Thank you, Chair Powell. Question about the labor market. You've mentioned a few times that the labor market is normalizing. Certainly today's JOLTS data suggested that things are kind of getting back to pre-pandemic levels. One thing that hasn't normalized is wage growth, which is still quite a bit stronger than before the pandemic. I wonder if you can share your analysis of why that's happening. Is it a lagging indicator or something else going on?
So I think if you go back to where wages peaked, wage increases peaked a couple, 3 years ago, essentially all wage measures have come down substantially to that. But they are not down to where they were before the pandemic. They're still roughly a percentage point higher. And we've seen pretty consistent progress, but not uniformly. And you'll note the ECI reading from Tuesday was expected to have come down, and essentially it was flat year over year, I think, roughly. So, yeah, I mean, that part of it is bumpy. And again, we don't target wage increases, but in the longer run, if you have wage increases running higher than productivity would warrant, and then there will be inflationary pressures. Employers will raise prices over time if that's the case. So we've seen progress. It has been inconsistent, but we have seen a substantial decline overall. But we have ways to go on that.
Scott. Nancy. Nancy, sorry.
Hey, Chair Powell, Nancy Marshall-Genzer from Marketplace. You mentioned consumers, and consumers are feeling the weight of interest rates right now. Mortgage rates are up, as are rates for car loans, credit cards. People looking to borrow are very discouraged. That's reflected in their views on the economy. What would you say to them?
Well, the thing that hurts everybody, and particularly people in the lower income brackets, is inflation. If you're a person who's living paycheck to paycheck and suddenly all the things you buy, the fundamentals of life go up in price, you are in trouble right away. And so with those people in mind in particular, what we're doing is we're using our tools to bring down inflation. It will take some time, but we will succeed, and we will bring inflation back down to 2%, and then people won't have to worry about it again. That's what we're doing, and we know that it's painful and inconvenient, but the dividends will be paid will be very large, and everyone will share in those dividends. And we've made quite a lot of progress if you can think about it. I think headline core PCE peaked at 5.8. Now it's at, anyway, headline peaked at 7.1. Now it's at 2.7. Don't want to get that wrong.
No, you don't. Quick follow-up. Are current interest rates really doing that much, though, to fight inflation right now for those consumers?
Yes. I mean, I think that restrictive monetary policy is doing what it's supposed to do, but it's also, in this case, unusually working alongside and with the healing of the supply side. That was different this time was that a big part of the source of the inflation and the reason why we're having this conversation is that we had this supply side kind of collapse with shortages and bottlenecks. And this was to do with the shutting down and reopening of the economy and other things that really raised demand. So many factors did that. So I think now you see those two things working together, the reversal of the supply and demand distortions from the pandemic and the response to it, along with restrictive monetary policy. Those two things are working to bring down inflation, and we've made a lot of progress. Let's remember how far we've come. And we have a ways to go. We've got work left to do, but we're not looking at the very high inflation rates that we were seeing 2 years ago.
Courtney Brown from Axios. Thanks for taking our questions, Chair Powell. I wanted to follow up on something you mentioned earlier on housing inflation. There's kind of been this long-awaited disinflation in shelter that still hasn't arrived. I guess two questions. How do you explain the substantial lags between some of the private sector data we're seeing and the government data? And how confident are you that rents will be helpful on the inflation front in the coming months?
So essentially, there are a number of places in the economy where there are just lag structures built into the inflation process, and housing is one of them. So when you have when someone a new person goes to rent an apartment, that's called market rent, and you can see market rents are barely going up at all. Inflation in very low. But before that, they were incredibly high. They sort of led the high part. So what happens is those market rents take years actually to get all the way into rents for tenants who are rolling over their leases. Landlords don't tend to charge as much of an increase to a tenant for whatever reason. And what that does is it builds up a sort of an unrealized portion of increases when there have been big increases. And what happens is, it's complicated, but the story is it just takes some time for that to get in. Now, I am confident that as long as market rents remain low, this is going to show up in measured inflation, assuming that market rents do remain low. What will be the exact timing of it? I think we've learned that the lags are longer. We now think significantly longer than we thought at the beginning. And so confident that it will come, but not so confident in the timing of it. But yes, I expected that this will happen.
All right, guys. Of course, we can listen to him forever. I'll actually mute it and let him keep rolling. But I want to take a little bit of time I think I can put my camera on. It'll be the right camera this time. Yeah, there we go. As you guys know, I'm chilling here. So just to get personal with you guys, as we see the chart in the background, and as Kim is like, Randy, what in the heezy? How are you taking at me trades? Yeah, y'all, like, that's how I got this good this fast, because I pushed the button a lot, like in sim and in live. Like, I pushed the button a whole lot. The more you push it, the more you can figure out, how you got to fix it, how you got to change things, move, dodge. I really be in my gamer girl mode over here, y'all. I really do. So yeah, I do. So if we, market ran up, we kind of expected that a little bit. Let's do a full screen here and just review what took place. If you guys want to keep Powell in the background, I will share the link with you guys. Copy. I'll put it in Telegram. Paste. All right. If you guys want to keep listening to him while I bring on my chart analysis, he ain't talking about charts. All right. So let's take a look at it. Let's look at a pretty clean chart. Let's not look at the overly charted up one that I have. And we'll look at what happened. So, all right. So we saw that it was kind of doing the move right at like 215, it was precursoring me right here, right? For those of you who jumped on at 2, you guys heard me and saw me get in on this 215 candle, right? I literally got in on this 215 candle because it was teasing me like it was trying to do the move to the upside. So looking at the 2 hour and knowing that the 2 hour let's recover it for those of you who came in a little later and just heard my profits going off and want to know, Randy, what did you take? This is what I took. There was a fair value gap here. All right. I said price is probably going to come to the fair value gap at 57.7. But the way it was teasing and the way it was teasing and today being today, I just had this underlying feeling that we had enough to finish it. Plus, it's not, if you measure just the length of the fair value gap itself, it's only $13. So be it FOMC day, it's highly likely if it's coming up for it, it might just take it all in one sweep, which, ta-da! So this is exactly what we did. Now, so this is the move that I made, and I got out at 50.90 first, just in case it did one of those Like, I'm going to run up and take this fair value gap, but I'm not confident in what Powell is saying. Powell is about to say some bullshit that's like not leading to everything is normal, because everything, I listen to his vibe. Is his vibe giving off fear, or is his vibe giving off we're good? If his vibe is giving off we're good, then things are going to do the healthy bounce backs like they're supposed to. When he starts speaking fearful shit, that's when things usually tank, right? There's still, of course, always a bit of uncertainty, but I think that's just his disclaimer so he won't get in trouble with his words. But overall, we read the chart. All right. We also know there was a 2-hour fair value gap that has yet to be finished up here, which is why I was leaning towards this coming back up. Have I got back into a hold all the way back up here? Not yet. I'm thinking about getting in right around this level. I'm waiting on, I was going to put in Telegram chat, but what I'm doing, I just decided to come on and tell you guys. So what I'm doing is the fact that it came all the way up here, we cleared the first fair value gap. And then as it was pushing, here is the second fair value gap, clear as day. Let me zoom it in since we got half a screen here, right? So this second fair value gap, it just pretty much cleared it all the way through. What do I want? I want my square box here. Okay. I'm going to take this line away. All right, boom. So we have fair value gap here and then fair value gap here. As we were chugging up, Powell kept saying things that weren't enticing fear. So I said, okay, we're probably going to at least catch this fair value gap close, which is why I put in 51.20 as my final target. So it came up 51.15. When it popped back down at 51.10, I got back in to ride it back up to 51.20. I got 3 trades out of this whole run. 3 trades out of the whole run. This was trade 1. This was trade 2. The pull back on the 15-minute to come up and close it was trade 3. Look, y'all, you just got to push the button, okay? You just got to push the button. All right, 3 trades. You just have to see it. And now if I come to the 15-minute, you can see it better. All right. So coming up here, trade 1, right? Trade 2, clearing all of this out to the top of trade 2, which is the bottom of the fair value gap, right? It was trade 2. This pullback right here, boom, entered as it came down. Trade 3 to come back up and clear it. That's literally what I did. Talk about playing an exhaustion candle. You got to push the button enough times to do finesses like that, but it can be done. All right. So that was my trade. I'm good with that. And now I'm waiting. We're waiting to see how it's bouncing around, it's consolidating. All right. So I know that potentially, one more time for the people in the back, potentially going to finish this fair value gap. We just smacked into the bottom of the order block. We got to consolidate and then come in. So you can enter right now. It's totally fine. Just know you're going to be sitting through a hell of a lot of chop. You're good with that? Good. Great. Right? If you don't want to do that, you can wait for the chop to form more. We have more red folders this week. Think with a little bit of prospective future mindset and you know what's coming. So we have folders tomorrow, unemployment claims, and then ADP non-farm employment change on Friday. These 2 things can potentially make price come back up enough to close out the 2-hour fair value gap, just to put like those smaller green candles. So let's come out to the daily, right? Because Kim asked a great question like before the call. And for those of you who came in a little later, I want to emphasize what she said. She said, well, doesn't SPY overall have, or ES have like a bearish sentiment? Yes-ish. But it can still pull up enough and still come down, right? We always have to recognize that even when something has a trend, a long-term trend, well, I don't care what direction, you're always going to have a candle in the opposite direction on a couple days. So in this case, we spoke heavily on the potential of this particular pattern forming a W. So if it's forming a W, it's going to do a lot of up, down, up, down, up, down, up, down, right? It doesn't mean price can't break out to the downside if we're looking from a weekly perspective. Right, you're right. Price is going to still trend down. But in the interim, from a day trader, it's going to go up, down, up, down, up, down, and then eventually break again to the downside. Again, it's the same psychology that I'm telling you right now on this 2-hour with ES. Do you want to sit through the chop while we wait for the breakout? That's a trader's choice decision. And as you figure out your emotions, as you figure out where it hits you at certain times of the month, where you're going to feel like being bothered with it, or your kids or your husband or whatever life plays at you, you got to figure out, is this the best time for me to be sitting through some damn chop? Right? Like, you don't want to sit through chop when I got all this crap going on. No, I don't. All right. So try to time these things with your life the best you can. All right. Based on your psychology, what you're going through. If you know you got a move coming up, you got, you can't expect deaths, of course, in the families. Right. But again, those are definitely indicators of it's time to take a break just by default. Right. It's your reset. You have other things to do, maybe other family emotional. This is some other big time in your life that's telling you to take a break, reset, come back to the markets, to your job, because it's not going anywhere. And you know where to find me and the trade script. So you have everything you need. So just pay attention to life events while you're trading for your psychology. All right. So in trading through chop, because that's the biggest thing. Because if I go to the weekly, yeah, of course, right now, this doesn't look like it's really like coming up. It looks like there's going to get two potential green candles, in my case, blue, because I have a funkified chart. But if it pops up here, right? So say my what was I looking at? That 2 hour fair value gap close that I really want is the orange line. So let's take this away. I don't even know where I got it. Well, here's another small fair value gap. Let's take these two and let's stop here because everything else is pretty much through. Above, this is 51.90. That's your final fair value gap close on a smaller time frame, 2 hour. All right. So coming out to the daily, all your fair value gaps been wicked through. So your 2 hour is just right here. Why couldn't it come up enough to hit me right there and still be coming down from the daily perspective? That's nothing from the daily perspective for it to come back up to that 2 hour, clear 2 hour fair value gap. It's nothing. That's why I betted on it, right? Because it's nothing. And then come out to the weekly, it's even more of a nothing. It's literally like, oh, so you telling me by the end of this week, you can close as a green doji? If it come up and hit here and say it retrace back down, now you have what, a doji right here? So yeah, the sentiment is still down. So of course still down. What is a doji telling you? It's just indecision. We don't know what the next candle going to be, right? But we got to remember that it's going to do these dojis, spinning tops, Marabutsus. What are some other single candlestick patterns? So we got Marabutsus, spinning tops, dojis, hammers, inverted hammers. All of those are going to happen while it's making a downtrend, right? So that's how you're able to do nice little day trades to get your money and get the hell out of Dodge, right? So right now I'm waiting because I want a nice little setup here of consolidation before it does take it back up, if it does it, because it doesn't have to fill that up in the time that I'm thinking. So I want to make sure I got a nice candlesticks right now. It's FOMC day. We know it runs up to run right back down. It probably closes fair value gap. Of course, you could take it back down, which is something I might do because I'm just in that gamer mode right now. All right. So just jump in for a short, clear the fair value gap on the bottom. It makes a little consolidation, come back up to the top, and then I ride it all the way back up. There's a whole thing. So I did measure when it was first coming down to retest the fair value gap. It was like $13 in there at one point. I'm just saying. You just got to know how to press the button. Again, I learned this because I did heavy fib to fib trading. For those of you who are with me during that time, I was in here at like every fib level, pressing the button. So I got good at it. So yeah, it's just that. The only right now, currently, if you want to take some, I would take it down. So if you're going to trade ES right now, I would take it down, test the top of the fair value gap, 50.95. We leave a wick, you may be able to get it to come through the majority of it overnight. Saying how much it popped, and it's FOMC day, and we have news tomorrow. So let me acknowledge this wick that's right here on this 2 hour candle. Of course, this 2 hour candle's not done yet. We got 36 minutes, and then that will give us more information. But just that line down there, ooh, look at that, right in alignment with that 15-minute fair value gap close. Ain't that something right there? So there's your shorts. There's your short. I would take it at that 2 hour wick level because you see how On the 15-minute, it stops a little bit short. I would even round that up, 50.77. Psychological number, probably 50.80 to be on the safe side. Leave $4 on the table, 50.80, take profit, get out of Dodge if it comes down and plays in the lower fair value gap as a short, and then reverse your position and take it back up as we continue to figure out what we want to do to the fair value gap that's left at the top. You guys know what's there. So I'm just going to keep saying that until it's finished. Now, once it's finished, then I can be like heavy holding on the put side. All right. But you can still hold it. Just make sure you have time to hold it as it does this move. That's my analysis with like ES SPY, right? And then what I think is about to take place here based on the candles that I see. And of course, this daily fair value gap is done. It has been wicked all the way through. So that means it doesn't have to come back up to this 50, 66, 2 hour. It can literally just bob and weave. We can have the other candle come down here, come down some more tomorrow.
Brandy, I have a question.
Yes. Yep.
You use ES for the SPY. How about SPX? And
So to me, I think you can use SPY or SPX. I think they're interchangeable, and I think Tanza did a pretty good job at teaching us that. So it's trader's choice, right? Like you have enough capital to trade SPX, then do it. I stay on SPY because I'm teaching with a $500 account mindset in mind for everybody else in the room. So I stay on SPY for the little guy in the room. You know what I mean? And then I trust y'all with y'all advanced expertise to apply it to SPX because it's the same chart. But if you need me to look at it, we can. You just have to do per request for that chart.
No, I'm not ready for that yet. I'm not ready for that yet.
And that's another reason why I know SPX gives anxiety and all that as a stay on spot for capital management purposes. Yes, that's exactly why. So, but the gaps are really identical. So, that's why I said it wicked all the way through on SPY. The dailies wicked all the way through. So we'll see how it just teases back up here with ES. You just got to trade it carefully, take each level. That's why I have all these on my ES, my continuous chart. That's why I have all these lines here, because I'm literally ensuring that I get out. Like I ain't playing. Okay. It's nah. If it's not going to take it, I don't want to hold it too long. I want to be able to read what it's doing at each one of these levels, like down to the 3 minute. Are you drawing a reversal pattern? So I will not hold too long to the upside and reverse back down because we know we're in a range. I hope that makes sense. Any other questions you guys got for me? Because I know I can rant. I'll just cut me off and be like, Randy, wait. Okay, who else made money during this run besides me and Esther? And I know Esther still thinking in sim. She's fixing some stuff. She rearranging her psychology. That's fine, but that dopamine is required for her to get back on track. I'm not worried about this. She got it. What'd you say, Kim?
But I had gotten to a call earlier today.
Cool. Anybody else? My silent but deadlies. Y'all know who I'm looking at. Move too closer to my age. Whitney and Alyssa. Which one of y'all done did y'all Viper strikes? Whitney and Alyssa, silent but deadly over there. They come up with it. Look, see, I knew it. Alyssa hit it with SPX. That's what I'm talking about. I love it, ladies. I love it. Take it. I love it. All right. I'm telling you, they don't be sharing their trades, but they be over there making money, okay? All the time. And it's cool. You don't have to share. I'm here to call out the levels for you. And they just go in there and just set their little orders and do their thing. A few other silent but deadlies. I ain't gonna call y'all out if y'all want to because I respect my elders. I know who's in here a little bit older than me. So I respect y'all, but I see y'all too. Y'all know what y'all doing. I know it. Alyssa, you learn from Risky Randy. Yeah, I'm not gonna let you keep that one because you're an Aquarius, and I have not met one Aquarius that won't take risk. I haven't met not a one. And y'all may calculate each risk different, but I think we share that sentiment. Alyssa, we share that riskiness. That's what I think. That's what I think. All right. Tanza came in here. Who else was typing Tanza? Alyssa, I'll see y'all. What? Have fun on the upper gap close. Yes. Come on, Tanza. I already knew you was in it, girl, because she see him all day. So congrats, Lizzie. I'm just, if you want to share, it just helps build the confidence for the room. You don't have to. Of course, looking at the 15-minute ES, we do have kids left in this fair value gap. So please keep that in mind. And that's why I said 51.30 for ES, right? Because we probably going to finish out this little fair value gap at some point. So we'll just wait on it. It did leave the kids in there. So we'll see how it does. We'll just see. There's a lot of little areas that we can retrace back up to. You just got to play it carefully. But I'm good for my training today. I took the afternoon session. We had a nice little morning warm up. And now we are here. All right. If there are any other tickers you guys want to scroll down to prepare, because we have 30 minutes left in the market. So if you feel like, okay, unemployment claims, non-FAR IDP, something you want to hold overnight. Any thoughts? I don't say hold SPY overnight, not for a call. I wouldn't risk that, because even though ES can do its little thing, I don't know if I risk that, because it can do its thing overnight and then unemployment come in the morning and then knock it back down in a way that you're back at square one in the morning with SPY. I don't trust it in this particular environment. It's not making me feel like we should do SPY overnight. Okay? That's just my 2 cents. Yeah, I don't trust that either. Agreed. All right. I'm glad we got some overall consensus there. And y'all have more than one trader, experienced trader at that, telling you not to trade this overnight. So this is great. So another ticker that we can check back in Disney. How did Disney do? Because I want to get back into Disney. So Disney still hasn't broken this. I mean, it stayed right here. So, I mean, Esther, you still holding on that Disney?
Girls killing me.
Break.
It didn't break. That's the only reason I'm still here. Okay. I would have sold the damn thing and taken the loss, but look at it. It's just stuck. It's like, I am not taking that daily fair value gap. Blow me. It's not doing it. It's just no. It wants to go.
It already did it quite a bit. Yeah, it beat it up quite a bit. We got earnings. So I'm just, my only thing is earnings. So, yeah. I know, because
they want to get out
that's
tomorrow.
where it's Disney independent by itself, right? Like nobody else matters. It's just Disney and Disney shenanigans when it comes to earnings.
Yeah, that's why I'm thinking maybe hopefully it'll bounce a little more tomorrow, but because it was up, the daily chart looks good, but the weekly chart's hideous. That was a minute ago. The daily chart looked okay.
The weekly gives you anxiety. I agree. I totally agree. Let's see how it forms. Like let's just see. Like let's see the 2 hour here. Golly.
It's like it's consolidating. It's just it dips its little toe into that daily fair value gap and says, "No, I don't want it."
So the only signals I'm kind of seeing on the 2 hour here, I see this wick back up here, but it's not really a wick by itself. It's actually kids with chaperones. So it is. It's kids with chaperones. This is completed, and this is wick through with no signal into this one. And oh man, how are you gonna? I think Disney gonna get ugly with it. I don't know why I'm starting to. Disney gonna get ugly. Disney gonna do this like ugly shit because of earnings. It's gonna be coming back up, but I'm nervous. It's gonna get ugly first.
No, and I'm in a June call, so.
I mean, true. I mean, when it runs, it's gonna run back up, and it's gonna act. It's gonna be like.
Unless they had a terrible quarter, unless they have terrible earnings, and then it's just going to go.
Yeah, that's the only thing. If they have terrible earnings, it's going to come straight through this.
Right. I don't really want to be any part of that.
You can make that. I would, because of theta and stuff, riskiness, and knowing that it can come down, If you want to give it the rest of the week, maybe.
Yeah, that's what I'm thinking. Today, tomorrow, tomorrow, maybe part of Friday, but yeah, I'm gonna get out after that.
Yeah.
Yeah, sounds
Let
too
it
risky,
do
Kim.
its
You're right.
shenanigans and come back for it.
All right.
I was
Thank
checking
you.
out SOXL. You're welcome. SOXL took a, what the hell is this? This is a, see, what? I don't even, okay. Hold on, guys. That's a 2 hour. No, it was this line. Okay, that. Daily. Come back out to daily. Weekly fair value gap open. You test back there. But ultimately, give me a second. I know I'm kind of jumping around because I'm trying to figure out what I really see. I don't like this line is in the way because it's doji. This looks terrible. Like you literally just did both sides today. All right, so we wait with XOXL and we enter maybe next week. Like what? You're writing down now from 115 to what's your take profit, Tanza? Because you're saying that while I'm, talking, but it's fine. I'll catch it on the flip side, girl. I'll catch it on the flip side. If you could drop that take profit, that'd be cool. Target that you're looking at. So yeah, XOXL, I'm gonna wait. We're gonna wait a little bit for XOXL to figure out where you're gonna go next. I don't really trust down. I don't really trust up either. We're gonna see what unemployment claims does to it. And then Nvidia, a sit and duck from the daily. Adobe. Oh, look at Adobe. You gave us a little run up today. Aw, how cute. I don't care about this little shit. Give me something to work with, dag nabbit. All right, I'm done. No, just bah. AMD looks a lot like XOXL. Let's look at Caterpillar. Oh, Caterpillar just dojied out today. Caterpillar is just like, yeah, nah. Yeah, like I feel you market. I don't know if I feel you like that. Like I'm pretty much at the top of my order block. I may be wanting to come back around sometime next week. I know I got some kids left down there, but I'm still deciding. We got to see. I do think we could probably clear it, at least test it because of the kids that are down there. Of course, on the weekly, because it dojied out. So maybe the next candle could be a continuation to the downside. Just got out at the next support 50.92, now riding to the next support 50.82. Come on, Tanza. I'm telling y'all want don't be scared. Don't be scared. Okay? Because this is how me and Tanza and a few others, because I can only call out people who allow me to call them out by you vocalizing. That lets me know that, it's okay a little bit because you're on your own, standing up for yourself, but you got to push that button. What she's showing you is just how much she's pushing the button is what I'm getting at. You got to push the button, 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 push the button. It's really not hard because it just go back and forth every time. Like it's just, let's go back to ES. Okay, let's go to the 15 minute. She's probably using the 15 minute. Because I said it's going to feel the fair value. Look at this, doing it now. All before 4 o'clock. So 50, she said 50, I said 50.80. Boom, we about to hit it. 50.76 if you think it's going to come all the way down. 50.80 to be nice, right? 50.80. And then from there, you wait and see. Next fair value gap, you take it and you're good. Way to go, Tanza, for that, man. I ain't gonna lie, I hesitated a little bit because I know I wanted to teach and talk. Nice. I love it. I mean, we called it. It was right there. I called it. It was right there. It was right there. I hope Tanza wasn't the only one who pushed the button on this one. I know I couldn't press it with her or with y'all on this downward pull. But hopefully one of you, maybe Marsha over there, maybe Claudia over there, maybe. I don't know. You guys don't always share, but I love the fact. I love it when you do. You guys blow me away and keep it going. So it's coming all the way back down. That nice little run up. So it just cleared. So remember I said, let's come back to the data and look at it. Remember I said, oh, if it doesn't want to leave a daily fair value gap, it's going to run all the way back up. Well, look at that. We have no daily fair value gap. None whatsoever. It just went away. There's no daily fair value gap because today's candle is the candle that would decide if we look at Marsha. There you go. There you go. That's what I'm saying. Speak up, ladies. Yeah. Yes. Get it. But we called it, right? It'll run up, clear out the fair value gap to not leave one, and then continue back down to make the double bottom if it's going to do the W. Better keep hinting to. Congrats, ladies. Yes. I love it. Come on. Expert, advanced, VIP traders of the Trader's Crib all day. That's who we are. Right, y'all? This looks beautiful. Beautiful, 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 beautiful. Right? So here we go, Kim. The market coming back down for her puts. So we come back down, like the larger time frame says. We're bouncing around, but we're coming down. Right?
Shoot.
Go ahead.
Talk it.
Tanza, were you saying something? Maybe not. Okay. No worries. So yeah, ladies, this is great. So definitely, hopefully you guys all took profit and are now paused for today until 6 o'clock. I do not recommend pressing the button anymore. You are pressed out until 6. Don't push it until 6. Sometime after 6, when the market comes back on, I think we're good for a day. Put wise, if you're already inputs, of course, with this, hold them. But I'm not jumping into any contracts right now. I'm going to wait. Because you see that run up right now? I don't know what's going to, we got, 20 minutes left in the market? This is great. I wonder what Powell finished off saying. Because y'all don't know I had to silence him in order for you guys to hear me. So if there was anything that made this fall down, that would be cool. We wick through from the 2 hour. We wick through both of these. So that means we do not have to come back up for that right away again. So let's see let's see what we do. I really am curious. This is a really long wick. How we play out overnight in preparation for unemployment claims. Because I think that's the data that we're feeling now. Like the next red folder. I always feel like towards the last 15 minutes of the market, the red folder for the next morning data is already revealed to the powers at B, and they start making their moves. So that's what I think we're starting to feel right now. And literally this happens like often. Things run up, or towards the end of the day, this is the best time to look for any overnight holds. So I still don't know if I trust a SPY put. Because I want SPY to come down, man. I want it to come down. Down. I want to test this weekly fair value gap, man. That would make me so happy. Just because there's kids down there, that's why it would make me happy. Because it would just be like I could really stick to my strategy across all time frames. Oh, it feels so good. This looks great, ladies. Any other questions? All right, I'm gonna scan through these tickers real quick and then let it be since we spoke about all y'all profits. All right, cat pillows where we left off. Apple. Let's look at daily charts. Apple no, there's nothing. Target. Ooh, Target, fill that gap to the bottom. Oh, look at it go. Oh man, we could have had that to the downside instead. Maybe you called the inverse, Esther. Like when we thought it was going up, we should have taken it down. This has been holding it put. Well, we said we were gonna wait because of this damn fair value gap, and this is why we wait. Oh, I love it. We still read it right, but Lord, look at it go. Love it, love it, love it. Okay, so she's holding overnight to 50.67. I don't blame you for the downside. Downside on that. Y'all keep talking it up. I'm gonna wrap up here. Netflix from the daily, stuck in the middle still. Amazon nowhere fast, kind of stuck in a nice order block. Any others? Tickers that y'all want to shout out? Let's see how silver held up. Whoo, silver. Okay, so silver ran up and filled the gap. Did you notice that, Esther, when it did that little thing? Did you do something with it? I don't know.
Yeah, I was
I don't know what you
riding
would
it,
have
waiting for it
did,
to go,
but
but it's still, no, I'm still in it, so it's killing me now. But again, tomorrow's another day. I'm gonna see what happens and maybe get out after tomorrow.
okay. Okay. AVGO. 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 What did it do with this data? So like right after I told you, because I was doing some stuff and I came back and looked at it, and I was like, damn, it did that little $10 move I was hitting to the day trade. So it
Yeah, I saw
definitely did
that.
that this morning.
I saw it. I was mad.
I know it did it quicker than I was able to get it back to you too. I was like, damn. So I was like, okay. So I'm like, now that's why I had labeled it like the next best trade, because I was like, okay, it could potentially come further down, clear out the further gap, enter the lower fair value, daily fair value gap. And that's why I said the 15-minute right now, you would keep eyes on the 15-minute for if it's trying to test the top gap, like in a good way. So it ran back up here, obviously, with Powell speaking, but are we really in a true bullish, reversal to take the up gap? So I may stay more bearish to the downside for now. Let's just pay attention to it because it's kind of stuck in that. Abandoned babies tend to make candles stick a little bit, get stuck a little bit. So you just tomorrow, I don't know if we can hold it tonight. I don't know if I want to risk that. And from the 2 hour, it looks like it could continue down tomorrow, but I don't know enough about the company, unfortunately, Kim, to help you make that assessment on that. With Tanz's analysis and what she's doing, that may give those who want to try SPY overnight the whole SPY, since she's holding down overnight, right? And she believes it's going to come down even further. So you could take that. We got 15 minutes left in the market to buy any additional SPY puts before the bell rings. All right. So here's a side-by-side view of SPY and ES. And this is a 2 hour SPY. And here's a 2 hour ES. So you guys got to figure out what you think is best for you as far as holding overnight. For me personally, I'm not going to do it on this one. But if you have some sentiment, if you could see what all we're saying, I'm not saying you can't, because Kim's inputs, the weekly is down. Just I know how I trade in my capital. So I'm not telling you the trend isn't down. I'm not going to take this one with you guys. All right. I'm going to wait on it based on other things that I'm doing with ES. Right. So that's just me. But take it down all day. SPY puts. Try it in sim, right? To get more confident with it. But please assess and read the charts. I do have ES longs for September also. Okay. All right. Y'all keep talking it up. Add in. If you need to jump on mic, you can. You're welcome, Esther. Have a great one. See you tomorrow or later this week. Of course, if you guys miss out any of the rest of the week, we do have Sunday school on Sunday, this Sunday. So we can catch up then and get into some deep charting since it's a new month, and we'll be doing a monthly top-down analysis. So please remember that. All right. But I won't do it until after this week finishes out. So we got all the red folder and on Sunday. Any other last minute questions? It was a fun day. I agree. All right. I'm going to let you guys go. I'm going to let you guys focus, take the last 10 minutes of the market and figure out what you guys want to do with your tickers as far as overnight holding. I'll see you lovely ladies tomorrow, and you guys take care. Ciao.